As you see that 2023 has come to an end, we bring to you a list of stocks that have actually outperformed or underperformed the street expectations set by the analysts at the start of the year. First, moving on to the underperformers. Now, these were the stocks where analysts were expecting a strong return potential for 2023, but the stocks have failed to do so. Green panel tops the list. Analysts were expecting a 61% return potential at the start of the year, but the actual gain so far for green panel has been just 3%. Now, this lower gains has been because of price correction in the export market and because of a steep reduction that we have seen in the MDF volume growth guidance given by the company. UPL Street was expecting a 42% return potential, but the stock is down nearly 19% so far for 2023, and this is because of the high inventory that we have seen globally and because of lower product prices. When it comes to Aavas Financiers, analysts were expecting a 39% return potential, but the stock is down around 22%, and this is owing to the top management changes and because of lower than peer disbursement growth that we have seen for Aavas Financiers. For Aditya Birla Fashion Retail, 33% growth was what the street was expecting, but the stock has been down 19% so far, and that is owing to weak margins and its high leverage that we have seen on its balance sheet. And lastly, when it comes to VMart, analysts were expecting a 27% return potential, but the stock is down nearly 36%, and this is owing to weak revenues, which was owing to price cut and weak demand environment that we have seen for VMart. Now, when it comes to the outperformance, BHEL tops the list. Analysts were expecting a 36% downside on the stock at the start of the year, but the stock is up around 120%, and this is owing to the government's more focus on power infra and because of its cheap valuation at the start of the year. When it comes to KPIT Tech, analysts were expecting a 1% downside on the stock, but the stock has gained around 113%, and that is because its presence in the niche engineering research and development business, which is more focused on autos, and autos did well in 2023. And along with this, peers also came out with its listing, which also led to a re-rating when it comes to KPIT Tech. Jyoti Labs, analysts were expecting upside of only 10% on the stock, but the stock has gained 117%, and this is because of the margin expansion and volume growth, which was better than peers consistently throughout the year. When it comes to Cyient, 15% upside was what the street was expecting, but the stock has gained nearly 170%, and this is owing to value unlocking. We saw the listing of Cyient DLM, which was a hit listing on the stock market, and also its performance was much better than peers. And lastly, when it comes to Prestige, street was expecting a 29% upside for 2023, but the stock is up around 138% so far in 2023, and this is owing to the new launches and the strong pre-sales growth that the company has shown so far in 2023.